Next step, adjusting journal entries 3 and 4 using the straight line depreciation method. Record monthly depreciation on the fixed assets. Record each depreciation expense as a separate adjusting journal entry. So for adjusting journal entry 3, we need to calculate the depreciation for furniture. So the furniture, they estimated that the useful life of the furniture will be 9 years, and they estimate that they will be able to sell it for $200 at the end of those 9 years. Residual value is the estimate of how much they can sell it at the end of its useful life. And then make sure to explain your calculation in the memo field. And there's a hint available at the end of this document. So let's open up our chart of accounts. Lists, chart of accounts, or accountant, chart of accounts, or just Control A, or click on chart of accounts over here on your home window. So our fixed assets range from here to here. So we've got furniture, we've got the furniture cost, which is the account where we actually put the purchase of the furniture. We've got computers cost, where we put the purchase of the computers. So we need to do the furniture first. So I'm going to double click on the furniture cost account. Notice that balance is $11,000. And down here, accumulated depreciation on the furniture is 0, meaning we've not recorded any depreciation on the furniture yet. So again, I'm going to double click on the furniture cost account. And then it looks like we bought it on January 31st. And since it's now the end of February, so that was a month ago. So I'm going to right click this just to open it up, edit the journal entry, and then here we are. We bought the furniture for $11,000. It looks like we paid $4,000 cash, and the rest of it was on a note. But that doesn't matter for this adjusting entry. We just need to know that the furniture costs us $11,000. So the formula for straight line depreciation is you take the assets cost, which is $11,000, minus the residual value, gives us $10,800. And then we're going to take that $10,800, which is the amount that we can depreciate over the life of the asset, and divide it by those 9 estimated years of useful life. So $10,800 divided by 9 gives us $1,200 per year. Now notice the instructions say record monthly depreciation. So and first of all, why are we recording just a month worth of depreciation? Well, remember, it is the end of February, and we purchased this furniture at the end of January. So that's 1 month's worth of depreciation. So if the depreciation that we just calculated was $1,200 a year, how much is that per month? Obviously, that's $100 per month. So we need to enter a journal entry, which this happens to be the window that we enter them in. So I could click New here, but let's just assume this was not open. And I just want to review. How do we get to that Make General Journal Entries window? We go to Company, Make General Journal Entries. And remember the date is the end of February, 02/28/19. And it automatically defaults to AJE3 since this is the third adjusting entry. And we said the depreciation amount is $100. Now we just need to figure out what the accounts are. So when we record depreciation, the debit is an expense. Let's see if we've already got the depreciation expense in the chart of accounts, and we do right here. Depreciation expense, comma, furnitures. So the expense is going up with the debit. And then we have to increase accumulated depreciation on the furniture, which is right here. Notice it's a fixed asset account. So we click on that. And the only thing we have left to do is to record our memo, which is explaining to future auditors how did we calculate this. So I'm going to type straight line straight line depreciation. So we took $11,000 cost minus $200 residual value, close parentheses, divided by 9 years equals $1,200 per year, which equals $100 per month. So there you go. Straight line depreciation, $11,000 cost minus $200 residual value divided by 9 years equals $1,200 per year equals $100 per month. I'm going to click Save and New. And then the next one we will do is AJE4. But first, let's check a few things. Let's go to the chart of accounts and see what has changed. So the chart of accounts, notice furniture cost is still the same, $11,000, cost us $11,000, but we now have this accumulated depreciation. It's a negative because it lowers the value of our furniture. And then what is the book value? In other words, what's the value of this asset, this fixed asset on our books? Well, it's 11,000 minus 100, and that gives us this $10,900. So this $10,900 represents the book value. And if we open up the balance sheet, it should show something similar. The date is 02/28/19, and there we go. Here's our furniture. The cost was $11,000 minus $100 of accumulated depreciation, and the value at the end of the month is, the book value I should say, is $10,900. And let's also go to our trial balance that we have open and see what it shows there. So we've got the furniture cost, $11,000, still there. And now we've got this accumulated depreciation, $100 credit, because it's lowering the value. And then if we look down, we should have depreciation expense on the furniture for $100. So that's how you calculate the depreciation and record the depreciation on the furniture.